Howdy, y'all. Welcome back. This is the weekly economic update for August 16th, 2021. I hope everyone had a fantastic weekend. It was pretty nice here in Colorado. Had some not too hot weather, but still wasn't not cooling off enough. Got a little chores done, got the kitchen cleaned up, and basically just laid around and watched baseball most of the weekend. So I'll admit I was lazy. So I hope everyone else has had a good weekend. We've had some wild news in the political world. Afghanistan has fallen apart since our withdrawal, and who knows where that's going to go. So let's go ahead and jump into the weekly update. Let me go ahead and share my screen. And let's see here. All right. So let's go and start with the, let's see here, weekly economic update. All right. The week on Wall Street, looking past inflation figures and the Delta variant trends, stocks last week found a way to climb higher and set fresh records, fresh record highs in the process. The Dow was up 0.87, the S&P 0.71. NASDAQ actually was down 0.09, and international was up 0.77. So like I talked about on my Friday video, all the U.S. indexes were up for the week. It was the NASDAQ that was, the one laggard, basically flat. So, all right, quietly climbing. Stocks moved higher amid relatively light trading last week after initially retreating under the weight of Delta variant updates. Stocks grinded higher, catalyzed by the Senate's passage of a $1 trillion infrastructure bill. Two themes emerged last week. The first was inflation assumed a less threatening profile. The most recent consumer price index report showed some moderation in consumer price increases, while investors appeared to interpret a hotter than expected producer price index report as the peak in the inflation cycle. I'll actually have some more on that in just a little bit. Also worth noting were comments by multiple Fed Reserve Bank regional presidents suggesting that the time for tapering, ending the Fed's bond purchases, was nearing, with one intimating that tapering could start as early as October. Well, I'm not holding my breath on that. Inflation reports. Consumer prices climbed at a faster rate since August of 2008, rising at 5.4% year over year, but this elevated rate was expected by most economists. The core inflation rate excludes more volatile food and energy prices, came in at 4.3%. Well, food and energy are things we all use all the time, so I'm not sure why you'd want to exclude that. Substantially lower than expected. This deceleration in core inflation was largely attributed to a slowdown in prices, price increases in used cars and apparel. More unsettling was the following day's PPI. The PPI, which can be an indicator of future consumer prices, came in at the highest rate since it began tracking, surging to 7.8%. Again, I'm going to talk about that in just a little bit. All right, economic data this week. We have retail sales and industrial production tomorrow. Wednesday, we have housing starts and the Federal Open Market Committee minutes. Thursday, jobless claims and index of leading economic indicators. We have a few companies reporting earnings this week. Tomorrow, Walmart, Home Depot, Agilent Technologies, and Roblox. Wednesday, NVIDIA, Cisco, Target, and Lowe's. One of my favorite places to shop. Thursday, we got Ross and Estee Lauder, and Friday, Deere and Company. So those are what's coming out this week. All right, I have a couple of white papers that I am disseminating with my newsletter this week. The first is the Wall of Worry. Starts out, have you ever heard Wall Street's expression, markets climb a wall of worry? It's the idea that financial markets are constantly on edge. Traders fret about how long a market rally can continue before it runs into trouble. Worry shifts from one news event to the next as traders attempt to build a case as whether it's time to go risk off with a portfolio strategy. If you're looking for something to worry about, you've got plenty of choices these days: the Delta variant, inflation, jobs, vaccines, Fed policy, taxes, unemployment, and so on. There's no shortage of headlines to help boost investors up the wall. But by early August, the S&P 500 index notched its 42nd record close in 2021. And while past performance is no guarantee of future results, it is important to keep in mind that the S&P 500 has moved higher despite a wide range of economic and financial concerns. Blah, blah, blah. The rest of it's just garbage here. So I don't know if, judging the S&P 500's, 42nd record close in this year is really a sign that there's nothing to worry about. We went through a downturn last year when this whole Rona stuff started, and while the markets have rallied, most of that, in my opinion, has been due to the massive amount of dollar creation over the last year that has been pushed out into the markets, which has propped them up. So my personal expectation is that once the music stops and everyone has to find a chair, we could have some more problems. So I'll leave it at that. All right. The next white paper, will air travel problems persist? Starts out, the airline industry plotted a course for recovery in 2021, but recent difficulties have put the plan into a holding pattern. While major airlines checked in with improving financial results for the second quarter, both they and smaller carriers have seen a number of complications, technical issues. The latest storm season and staffing issues have led to thousands of cancellations in recent weeks. How will the airline industry meet the world's voracious demand for fast and reliable travel? While it's possible that staffing issues may only be temporary in light of the recent Delta variant surges, could these workers be looking for other, less public employment opportunities? However this might affect you as you travel for work or pleasure this summer and beyond, know I remain your personal air traffic controller, blah, blah, blah. Anyways, I have friends who work for some of the airlines, and from what I've heard, just from the scuttlebutt from them, is that a lot of folks were furloughed or laid off last year. And, they were told it'd be 12 months or 18 months. And, when the volume of travelers picked up, the airline said, hey, you got to come back. And there were a lot of folks kind of dragging their feet. So I think some of it has to do with just, you don't have enough bodies to, throw bags and, get people on and off the jetways. So staffing issues obviously cause a problem. We can see that there's still a lot of people who are out of work right now or who are not employed. I'll leave it at that. But we'll see where that goes. All right. The third one I had, it's called Mixed Signals on Inflation. And it begins, are you having a tough time keeping track of inflation's mixed signals? You're not alone. Consumer prices in July climbed at a faster rate since August of 2008. Worse, producer prices, which can be an indicator of future prices at the consumer level, rose at the highest rate since tracking began. However, in recent weeks, the stock market has shrugged off the inflation news, believing that the worst is over and rising prices will moderate in the future. I don't know about that. It's important to remember that the stock market is a discounting mechanism, which means it's always looking forward. Put another way, the stock market's price today represents all available information about our current and future investments. How far forward the stock market is looking, most agree it's discounting activity 6 to 9 months into the future. So I guess, what they're trying to say here is, stock analysts, when you go and read the stock papers, that what they're evaluating is, is it, within the next 6 to 12 months, this is a fair value for, say, AT&T. So that's essentially what this is talking about. And, whether or not, you view inflation or the, whether or not inflation will continue over the next 12 to 24 months, it certainly is going to have an effect on stock prices. So if inflation continues, I would imagine that the price of stocks will continue to climb. If inflation is tempered and starts to retreat, along with the Fed, with reducing their quantitative easing, and if they actually start selling off their balance sheet, again, you will see the market reflect those changes. Typically, I would expect some sort of a pullback. All right. So we did talk a little bit already about the PPI index, the year over year, and just looking at this chart going back as far as it does go to 2011, I guess, it has really climbed here in recent months. So you can see right here, this is quite a quite a big jump comparatively to inflation spikes that we've had in previous years. So this is pretty significant. All right. The other one I wanted to look at was the export price. This is the price of goods that as we export them, what those prices are. And, they have also in the last year, significantly climbed. So, I mean, these are the, say we build a pin and, say you take this pin and, you build, pardon me, 1,000 of these and you're going to ship them over to, say, France. What this is showing, or what this chart is showing, is that, prices have climbed. Right now it's up 17.2%. So year over year. So, if we're selling goods to the rest of the world at, 15 or 20% higher than a year ago, obviously that's due to the increased costs of, creating those goods and then also exporting them. So, until we start to see this start to fall, again, we have to look at everything, as a whole, as opposed to just cherry picking a couple of good stats. It's important to look at the entire picture and have a pretty good understanding. So, all right. I had an article here that I wanted to share with you. It talks about home prices have surged in the last year. Please don't play again. Thank you. All right. What was the big part of this I wanted to cover? The organization's latest quarterly report finds that the National Association of Realtors, that's who did this report, finds that 94% of 183 metro areas experienced double-digit price increases, up from 89% in the previous quarter. The median sale price for existing single-family homes rose 22.9% to $357,900, an increase of $66,800 over the last year. The Northeast led with double-digit year-over-year price growth at 21.8, and this followed by the South at 21, the West at 20.9, and the Midwest at 17. And this is in quotes. Home prices gained and the accompanying housing wealth accumulation have been spectacular over the past year, but are unlikely to be repeated in 2022. And a National Association of Realtors chief economist Lawrence Yun said in a statement, there are signs that more supply reaching the market and some tapering of demand. The housing market looks to move from super hot to warm with markedly slower price gains. So, what this economist who works for the National Association of Realtors is saying, that his expectation is that over the next year, going into 2022, that price gains should slow down. We'll see. I know, just looking at the price of my home, I do keep track of it. I keep track of all the sales and buys or homes that are for sale in the local area. If there's a good home that something I might like, I like to know what's available. And I also am curious of what homes in my area are selling for. All right. These 12 metro areas reported home price gains over 30% year over year, 8 of which are in the South and West regions. They include Pittsfield, Massachusetts, up 46%, Austin and Round Rock, up 45%, Naples, Florida, up 41.9%, Boise and Nampa, Idaho, 41%, Barnstable, Massachusetts, up 37.8%, Boulder, Colorado, 37.7%. It's a pretty ritzy area up there by the college. Bridgeport and Stamford, Connecticut, 37%, and that's about. You can read this. Let's see. Over the past 3 years, the typical price gain on an existing family home totaled $89,000, with price gains in all 182 markets. The markets with the largest price gains include San Francisco, $315,000, San Jose, $294,000, Anaheim, $279,000, Barnstable, Massachusetts, $220,000, and Boise, $206,000. So it's kind of scary, if you're a young person out looking to buy a new house. This could be a bit daunting, especially if coming up with a down payment is tough. All right, and then the last thing I wanted to talk about is, while it does appear that the job market's looking better, Home prices are up, which I don't know if it's good if you're selling, not necessarily good if you're buying. But this is a chart of consumer credit, and this is from the Federal Reserve. And what I'm looking at here is we had a significant drop in revolving balances last year. As the coronavirus pandemic picked up and stimulus checks started going out. I mean, you can see a significant drop in revolving debt that people had. Well, it has started to climb again since, a lot of that, the unemployment and the additional benefits have run out. And this month alone, as of, this chart's terrible. As of June, the revolving consumer credit is up 21%. So it appears that people have gone from paying off their debt to increasing the debt that they have. Additionally, let me take off this red chart here. You can see that the millions of trillions of dollars that are in the revolving debt market had peaked at, when was that? Come on, work with me here. That was January of last year, and it did fall quite a bit from about 1.1 trillion down to under $1 trillion, but since then has started to climb back up. So this is something that does give me some worry. In my previous life, I was a debt collector, and anytime that the economy started to wobble or stagger a little bit, delinquencies just would shoot through the roof, and you could see it in your the inventory that was coming in through the different queues. And if debt starts climbing and unemployment or jobs start to dry up, I can see that this could be a real problem. So my advice to folks is pay off your debt. The best situation you can be in is to be as debt free as possible. Have a strong cash reserve so that if the shit does hit the fan, you're not going to be in a position where you're having to liquidate assets or sell off things that you really don't want to get by. So that's my advice, and that's everything I had to cover for the weekly update. Hope everyone has a fantastical week. I don't think I have any major stuff this week. Let me look at my calendar. And nope, I got a what is that? A webinar on Wednesday, but most of the week is pretty open. So if anyone needs to reach out to me, feel free. Give me a call, shoot me an email, smoke signals. Those are some of my favorites. And, we'll go from there. So hope everyone has a fantastic week, and I'll talk to you on Friday. Adios.